Hello everyone. In this video, I'll discuss the differences between an employee and a self-employed independent contractor and the criteria that the CRA uses to determine whether an individual is one or the other. The learning outcome here is for students to be able to assess information from a given narrative, apply the criteria, and conclude on whether a taxpayer is an employee or self-employed. Don't forget, these videos are meant to supplement the assigned readings, but not replace them. Let's take a look at the following scenario in which two students get jobs painting houses for the summer. Student A spends the summer painting 3 houses. The contracts for painting the houses provide for a fixed fee, and the student supplies their own paint, brushes, ladders, etc. when performing the work. Student B works for a painting company and receives a wage of $10 an hour. They're paid every 2 weeks by paycheck, and all the supplies are provided by the painting company in this case. So is there a difference between these two individuals as far as taxes are concerned? Now the first student contracts on a fee-for-service basis. They bear the full risk for the quality of their work, how it's performed, and the collection of the fee. As a self-employed independent contractor, the income earned here is likely business income. Student B is under the direction and control of the painting company, which in turn contracts with the customer. Student B receives a wage and is not responsible to the customer for the quality of the work or collection of the fees. Therefore, student B is likely employed and earns employment income. When we're determining income from employment for an individual, we might have to determine whether that person is actually earning employment income or possibly business income. This decision is important to be made as there are actually different rules surrounding how these different forms of income are treated for tax purposes. So how can we determine what types of income we're actually looking at? Surely the Income Tax Act provides some sort of guidance here, except no. The Income Tax Act doesn't actually indicate how to make this decision, so we are, once again, left looking to court decisions to establish whether someone is earning income from employment or income from business. So why does it even matter whether someone is an employee or self-employed? Isn't it all just income? Is it better to be one or the other? Well, not necessarily better per se, but there are definitely advantages and disadvantages of both. Some of the advantages of being considered an employee for tax purposes are: employees are bestowed with a number of labor rights, including the provision of vacation and severance pay, etc. They're often provided with lucrative pension plans and injury compensation if they're hurt on the job. Employees also often receive different types of group benefits by virtue of being employed that we'll discuss in further videos. Some of these would include medical and dental benefits, gym memberships, etc. Being an employee implies a certain level of safety and job security. Now, being considered an employee also has its drawbacks, as it certainly provides a lot less flexibility in a number of areas, such as compensation, decision-making, and hours of work. Employees have very little control over the timing of source deductions, such as CPP, EI, and income taxes. The biggest drawback for tax purposes is that there are very few deductions from income that employees can make relative to self-employed contractors. Accordingly, many people would prefer to be considered independent contractors so that they can deduct more expenses from income. Lower income means lower taxes. Let's take a look at some advantages and disadvantages of being considered self-employed for tax purposes. Now, the greatest benefit for tax purposes of being considered self-employed is that any reasonable expense incurred for the purposes of earning income is deductible. Again, lower income means lower taxes. Accordingly, many people would prefer to be considered independent contractors so they can deduct more expenses from income. Contractors don't have to remit source deductions such as CPP, EI, and income taxes at receipt of payment, although they still ultimately have to pay them. Being an independent contractor just provides a greater level of flexibility to the individual overall. Now, some of the disadvantages of this status are that the contractor must pay the employer CPP and EI amounts. They frequently are entitled to few, if any, employment benefits and have very little job security. Contractors can generally be let go without any compensation at a moment's notice. So what about employers? What's their preference? In general, they'd likely prefer to hire independent contractors for a number of reasons. Employers don't have to remit CPP or Canada Pension Plan, EI, employment insurance, or income taxes to the CRA for independent contractors. This is a lot simpler and saves the employer money. It's also generally just a much simpler business relationship and doesn't require payment of benefits or severance. Hiring independent contractors tends to provide employers with much more flexibility. For example, seasonal businesses may hire during busy times of year, but they can let contractors go when the business slows down. What about the Canada Revenue Agency? Do they care one way or the other? In reality, they tend to want to challenge an individual's status as a contractor, as this is an area that people tend to abuse, specifically in order to deduct excessive or non-business related expenses. The CRA is also able to collect source deductions sooner from employees. It's up to the individual to provide evidence that they are an independent contractor when they're challenged by the CRA. Given the importance of this determination, how does the CRA decide if one is an employee or self-employed? Again, there's no guidance in the Income Tax Act, so they will employ a series of tests and make a conclusion based on the evidence presented. The tests are control test, ownership of tools and equipment, the chance of profit or risk of loss, and integration. Now keep in mind, these tests are interrelated to some degree, but we're going to analyze them separately and provide our conclusion. The control test considers whether the individual is directed by someone or has free rein over their work. In specific, you'll consider what work needs to be done, when it should be done, how specifically it will be performed, and where the work takes place. When an individual has little to no control over hours of work, types of assignments, location of work, etc., they're more likely to be considered an employee. Conversely, when the worker doesn't have an office at the workplace, maintains some or all control over when the work is complete, how it's done, etc., the evidence leans towards contractor status. One specific consideration here is whether the worker can hire subcontractors or not. If not, they're more likely an employee. This second test considers who provides the tools required to do any given job. Examples of tools could be anything from computers and software, office supplies, to a tradesperson's power tools. If a person provides consulting work to a business, the tool they provide could be considered to be their knowledge and experience that's required to do a certain job. If a worker provides their own tools, this evidence supports contractor status. If a business provides the tools for the job, this evidence supports employee status. This third test examines whether the taxpayer has a chance to earn a profit on a job or bears any risk of realizing a loss. Generally, an employer assumes any risk associated with providing goods or services and gets to keep any earned profit. If a worker earns any fixed fee, like a salary, they're likely an employee. If a worker can potentially earn a higher profit on a job or potentially take a loss, this is evidence that they are self-employed. This final test considers how integral an individual is to a business. The higher level of integration an individual has with a business, the likelier they are to be an employee. This would include any receipt of workers' economic rights or privileges or benefits. If a worker was considered to be ancillary to the business and its functions, then they're more likely to be considered a contractor. Now, some other factors to be considered would be the degree of economic dependence on the organization of the individual. Is this their only source of income? Do they have other clients? Or is this business the only one? The higher degree of dependence, the more likely they are to be an employee. When applying the tests, it's important to note that no single test provides more evidence than another, and therefore no test takes particular priority. Not every test is going to be applicable in every situation, so don't force results and evidence if it's not there. Consideration of all applicable tests is necessary before weighing the evidence and coming to a strong, well-reasoned conclusion. In this course, where possible, we'll try to consider tax planning angles for various topics. Here, in order to structure a relationship that is more tax advantageous to the contractor and employer, the two parties could initially enter into a contract that clearly defines the contractor's status. To ensure this isn't challenged by the CRA, the employer could require the contractor to provide their own tools, provide them with latitude over the hours, and ensure that they work for multiple clients. If you'd like further illustration of this, I've actually made a sample walkthrough video of a type of problem that you might encounter, on an exam or, hey, even in real life. So you can check that out on D2L as well. Good luck.